The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman here on this Tuesday, the 30th of July. One more day to go. Well, 2 days today. We've only just barely started today. And we're looking at the market. As always, we're looking at this most recent weeks. We're looking at a very mixed market. But let's go through this. I wanted to show you in the E-mini right here. We made a peak F in the 1 minute chart at 55.27.50, and we pull back suddenly, very sharply. But look, that was a peak F in the 1 minute chart. The 5 minute chart was also peak F, and the 10 minute chart was a peak E, and we had a real tumble. It went down from the that 55.27 level down to a low of 55.04. Yes, 04. And now it's come back very nicely. So I wanted to show this for a number of reasons. And that is to say that within the context of chart formations, look at the way the 9-period moving average since midnight last night, the 10-minute E-mini crossed positive and has held positive even through this sharp dip to the 200-period moving average. Fantastic. Look at that magnet right through the this is about, let's call it 2 o'clock this morning. Yes, no, really, it's 1 o'clock this morning until it broke out at about 2:30. Look at that magnet line of the 200-period moving average. Look at the beautiful symmetry between the left side, and the right side in the cup formation with a low that was made right there at 22.50. So that's just about 11 o'clock last night Eastern time. And look at this beautiful from the high that was made at 8:40 yesterday on the 29th at 55.34.50. We had this extremely strong rally, took out this left side high that was at the 55.24 level and went almost to the 55.32, didn't get there, went to 27 and then pulled back. And now I think we've got a kind of a choppy sideways move. And let me explain what I'm looking at. Number one, we'll go through these one at a time. The Dow, let me get to the Dow, INTU. Okay. I've called this a gray leg B. The 41,376.00 round number high of the 18th. From the 18th, you've got 1, 2, 3, 4, 5, 6, 7, 8. 8 sessions. We haven't come close to that level yet. That's the power of a round number, as far as I'm concerned. And within that context, what we're looking at here is a cup formation forming with a 9-period exponential moving average. One of the reasons why we've added to our longs is this 9-period moving average is really powerful at this time. It is making an M-shaped pattern, which says, be careful, because this right side is where you possibly could start to see some kind of a give back. But in the meantime, let me just get rid of that. What we're looking at is the MACD is slightly positive. The gray line daily relative strength index is okay. It's not as strong as it was at the high on the 18th of July, but it's improving. The on-balance volume of the blue line is strong. The stochastic's weak at 53%. It needs to get much higher, so there's room to grow, but I'm a little concerned when it pulls back because at least it's one of the many technical tools that I use that says, be a little careful. Now, in the weekly chart, we are filling in this long wick from 3 weeks ago, and the 9 is over the 14, the price is over the 9. The MACD is strong. The stochastic, well, I shouldn't say strong, is positive. The stochastic's at 77%. I prefer 80%, so this says there's a little work to be done, and the on-balance volume is very good. So the weight of evidence in the weekly chart says you've made a double U formation, broken to the upside. the rule of thumb for me is when the price breaks a resistance level or a support level, you want 2 out of 3 bars for the price to close. If it's on the upside, above the most recent peak, and if it's on the downside, above the most recent low. Now what we're looking at is Dow's up 141. There's still this relative strength. It's really mixed. Because I wonder what Pfizer's. That's right. Pfizer's out. Oh, I have to keep running through the list of Dow stocks. I used to have them just memorized like that, but they've changed so much lately. All right. So what is Pfizer doing? Even though it's not, it used to be. Oh, I don't like that. I just heard. Oh, there it is. You are about to delete. No, don't delete. Cancel. Thank you. PFE. I'm just putting this in. PFE is not in the Dow anymore. Merck is in the Dow, of course. So we've got our. Wait a minute. Merck is not in the Dow anymore. Everything's changing. I should know this by memory. So Pfizer popped up, and it's now down 4 cents at 30.68. I'm calling this a G/C because it is an instant restart. So, yeah, it's holding quite nicely. All right, I just wanted to have that just to give us a sense of where we are. G/C. All right, let's get back to our story. So the Dow 30 has the mix of economically sensitive stocks that are pertinent to the rallying going on in the market right now. That's just it. That can change. Had a question from a subscriber. Are we not going to go to any shorts? That's a really good question. I didn't want to mix my mind up by saying, yeah, I do see shorts. For instance, SPXS would be our short position if we wanted to go to the SPY. It's holding okay. SOXS would be the 3-time short position in the semiconductors. And I mentioned yesterday we probably will start another position. I didn't do that today. I just didn't want to mix my mind up saying there's residual strength. Let's go with the strength for the moment, and then we'll deal with the short side. Well, the semiconductors are struggling. They're down today 2.11 at 236.49. That just says, my rule of thumb always, now I don't know if I'm supposed to say rule of thumb anymore. I can't say anything. You got to check them out. I guess if you go back far enough, rule of thumb doesn't have any bad connotation. I read something yesterday about maybe there's something it had some connotation, but anyway, I like that expression, rule of thumb. All right, my rule of thumb says that where the semis go, the general market is going to follow. But we've got a huge move up in the semiconductors that needs to digest those gains, and that's what we're looking at. So therefore, there's residual strength, and the residual strength has been flowing through other sectors. I'll go through that in a moment. Now, what we want to look at, let's go back to, we're looking at the S&P, which was coming off the high of the day, but it's still holding okay. But the 9-period moving average, it's below the 9, and the 9's pink, below the 14. That just says we've got a sell signal. I haven't yet upgraded it to a sell mode yet. I should have, because there's so many bars below the 9-period moving average. I just wanted to give it a chance, another little room, but I think it'll be in a sell mode today. So yeah, we're starting to see something that's quite a bit of a divergence. The same, that's in a sell mode. So let me just do that. I have to put a down arrow. I forgot to put that in. At a peak F, and from the 503 high, and here we are at 464. I'll be right back in a moment. Basil Chapman, Target Conditions Hour. Dow's up 121, S&P's up 9. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
TFNN has launched The Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
We're back, Basil Chapman. So the question is, for subscribers to my opening call, we don't have any shorts at this particular time. Do I want to have shorts? And the answer is, I believe that we're getting to an inflection point right now. How the Dow and the IWM, let me just go there for the moment here, the IWM, which is now giving back some of the gains, but it's still holding okay. If the Dow and the Russell 2000 small caps start to pull back, then there's a chance that as the end of the month buying stops, and that should happen by Friday or so, I think that we've got to be a little careful coming into the following week. Now, we've got Microsoft, we've got Amazon, we've got Meta. You know, we've got these stocks, Apple. We've got things going on here with these really important Mag 7 stocks. I don't know if they're still 7, but anyway. And I think they are looking, when you look at this, for instance, let's go to this right away, Microsoft. So we've been long Microsoft for a very long time, and we've also had trading positions. So since the October 31st low, that's where we got in, we've treated it as a long position and only wanting to trade the long side. I spoke about this top at 468.15 on the 5th of July with a Chapman wave silent doji candle the following session. I said there's a really good chance that Microsoft is going to take a bit of a spill, but we're not going short. I don't want to confuse what's going on in my mind. With the Dow and other indices, I don't have a problem shorting, having a long position. We've had long positions in the Dow since March of 2020 and again October of 2022. Still have them. I don't mind going against that. That's different. I just didn't want to confuse things in my mind, but everything about this beak formation in the stalk leg said that bounce that we had, and we had it as a trading position, and then it culminated in the 440s, that there's a really good chance that Microsoft, this beak, remember this is a stalk leg formation, leg, body, neck, and then I said the beak has got it just went underneath the arch high. There should be a bounce That's a bounce we're going to play. And then we have to wait and see what happens. You're on your own. Well, this beak has continued and has gone into the body. Now, if this price of Microsoft, and this is important because Microsoft is in the Dow, it's in the S&P, it's in the QQQ, it's in the XLK. It is part of the AIQ area as well. That's the artificial intelligence. So if we see Microsoft after earnings today, and I don't know what they can say to make it a spectacular move to the upside, to break into the 440s again. It's at 428 right now. Even to go to the 432 pink 9-period moving average, I think it needs time, and I'd like that because I want it to be part of the big move up that goes into the 2024 next series of highs. So it needs to pull back. That's my outlook right now. The fact is, it has gone to a leg E in the monthly chart, so it's accomplished a buy mode to at least a D. So anything can happen from here, but the technicals are still pretty strong. What has happened is that Microsoft technicals in the weekly chart, the 9-period moving average hasn't turned pink. It is so close. If we break the low that was made the other day, that was at 417.27. If 416 gets taken out, I'm pretty sure that green 9-period moving average in the weekly chart is going to go pink. Then we have to look at this low right here at 388.03, the low of the week of the 26th of April. Wow, if that's taken out, we're looking at something completely different, and that's going to impact the general market. So I'm saying that the best case is that there's a bounce in Microsoft, and it lasts about 2 weeks or so, and then it comes back and does some retest. I still think it has to do retesting of the 14s, somewhere in the 415 to 410 area over a period of weeks. But in the meantime, if it does a really good bounce, that's good. Okay, so we've done that, and I want you to continue by going to the GDX. Is up a little bit today. It's up 7 cents at 36.71. Not going anywhere, but not going anywhere. So, in other words, gold is just stuck in a range, in the lower range of maybe, let's call this now a rectangle. It's really past the U-shaped pattern. I'm going to call this a rectangle, and a large rectangle is something that must be monitored, because if the price breaks and closes below halfway into the higher part of the rectangle and the lower, and we're actually in the lower right now, then you have to be careful because it could be a retest of the lows. But in the meantime, the MACD's weak, the stochastics weak, the on-balance volumes weak, and look how strong the 9-period moving is over the 14. That's my indicator of last resort. And boy, is it holding nicely right there in the weekly chart. But the daily went negative 2 days ago, and I'm considering that that's something to be careful of. That's gold. Silver tried to rally. It is now up just 25 cents, trying to get off the 200-period moving average of 27.46 at 28.13 right now. All I can say is that there are some stocks in the gold and silver area that are holding really well. Whoa, some of the others are just getting slammed. And hopefully you're in the ones that are holding, because it gives you at least a good chance that if gold and silver start a really good rebound coming in the next 7 to 9 trading days, and silver can get to the 29.80 to 30.20 area, that's going to be very important, because if it breaks under 27, that's a problem. Let's go to the dollar. As I said, dollar's running a little bit. Yeah, good. It's a leg. Ooh, wait a minute. That could be a leg C. Let me see if that's the case. I think that's a peak right there. Maybe not. We've got 104.42 going to 104.42. A, B. This is leg B right now. It's a gray B. Do I do this now, Tuesday, or should I wait till Friday? I'll do it right now. When there's a retracement from a sharp low in the price of anything that you're following, and the technicals still need a lot of work to become positive, I treat that as not a buy signal yet, let alone a buy mode, because you want the 9-period moving average to cross positive, and it hasn't in the dollar daily. The MACD has crossed positive. The relative strength is rallying. The stochastics at 51%. Why is that blue line there? Oh, that's the volume line. 51%. So it needs a lot of work. and the weekly chart has gone pink. So this is a work in progress that's trying to get to at least a buy signal. It hasn't got there yet. So it's good, but it's not great. It's really just a sideways move. If you look at the EUR USD, look at this. You type it into this little rectangle. There you go. EUR USD. There we go. That is weakness. And because of that, trading at 1.080 on the 200-period moving average, I think that I have to go to a sell signal right here. Or I should wait for the end of the day. No, it's done it enough times that I can do it right now. It's a sell signal, not a sell mode. It's just a designation right now. The sell mode would say that if it goes under 1.0780-ish, that's going to increase the decline chart that we're looking at right now. Let's go to USD JPY as we go into the break, and that's trying to bounce in leg, gray leg. I'll be right back. Dow's up 180, S&P's up 5. Be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Tigers, it's back. The annual July Tiger Dollar Sale. If you've been wanting to try one of our products, from our stellar newsletters to educative webinars, now is the time. From now until August 1st, we're offering a 20, 30, even a 40% bonus on Tiger Dollar purchases. After being applied to your account, your Tiger Dollars will be used for all purchases. They can be easily transferred, and they never expire. If you want to receive a 20, 30, or even a 40% bonus from purchasing Tiger Dollars, now is your chance. This is a perfect opportunity to try out a newsletter or save big on your current subscription. This deal is only available until August 1st, so lock in your bonuses fast. Go to TFNN.com today to lock in your bonus. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
So we're looking at the E-mini going right average 5-10-minute chart, which means that this level right here, coming up in the next 4 bars of 5498.25 is going to have to hold as support. Can it do that? Because the S&P has given back a chunk. Look at that. All the way from the 55.2750 level to where we are right now, 55.03. We'll see what happens. So one of the things I was looking at, I was warning to subscribers, is that this is so select that even though we've added to long positions, those long positions still have quite tight stops, and we will take profits whenever we can. We did that yesterday, and we got back into this position, and it's up now. But the day is young, but it is in the select area that's working, and that's the reason why I'm trying to isolate in my mind the longs from the shorts. Now, one of the things we've also got to look at, let me go to this right now, is right here. So in the context of what's working, so USD JPY is having a little bit of a bounce, but that pink 9-period moving average is still very negative. MACD's negative, stochastics at 19%. It's just not looking very good. And the weekly chart is very close to turning pink. It hasn't yet, and that'll be a negative. So within that context, let me do a couple of things here. So the question came in about SoFi. So SoFi is a stock that we briefly had once. It's a very difficult stock because SoFi Technologies, Inc., online banking, financial solutions, student loans. So you can see, look at the choppiness here, but mostly we're making, in the weekly charts, lower highs and lower lows. And SOFI is a symbol trading at 7.30, down 2 cents. Not bad, but it ran up. This one had earnings. I think its earnings are out, right? So now look at this. There's a decisive move down to the bottom. Now, it avoided a 1-to-1 propeller shaft. Look at that. Look at that channel. And look at this channel right here. Look at that trend line and this trend line right here. And look what we've got. We've got just a perfect down channel. I mean, you couldn't make... I love this. How does the chart know to go a daily chart that is from March, all of March, April, May, June, and almost all of July? So that's 5 times 20 trading days. Let's say, so out of 100 days, how does it know to have this perfect channel where it doesn't break above the trend line and it doesn't break below the trend line, and then suddenly it has a pop to the upside, and then it comes back, and now it's doing a whole bunch of testing of the trend line as well as the 200-period exponential moving average. So this is something that says, yes, this is the first iteration of an up move, but that doesn't mean to say it's going to stay. So I just need to see, we got a little ping here to say there's a caller. We have Mike in Ormond Beach. Mike in Ormond Beach, how are you? We're going to come back to SoFi in a moment. You want to look at? Hi.
Freeport McMoran, FCX, please.
Yes, so the copper area has been, I wouldn't say badly hit, I'd say very badly hit. It's gone, look at this, 1-to-1 to the downside in the weekly chart. It's now got a down arrow in the weekly chart for a sell mode designation. That doesn't mean that this very moment, it could be a turnaround, but that's the designation up until this very second. Okay, so do you have a position? Are you looking at it as a long, as a short? What's going on?
Basil, I just had my eye on it, and it looks like we're getting close to like a little daily double bottom. It looks like we're testing the area we had on July 25.
Yes.
And also it's close to my 200 SMA that I also keep on my chart. And I was wondering if you thought this might be an area where we could get some kind of a decent bounce.
So first of all, I want to tell the listeners, you heard Mike in an almost apologetic way saying, my 200 SMA. And the reason I'm saying that is because I always use the exponential moving average. You know what?
Right.
I never say anything about anybody using any technical tool, because if they use it often enough, it becomes really important and they understand it. That's the most important thing. So he understands how he uses the SMA, and that's good. And what happens is that in this particular instance, I suspect that the SMA is somewhere around 4280 or 4320. And if that's the case, yes, but when you get a double bottom like this, you could even say, wow, this is a head and shoulders, because look, the left side low on the 23rd of July at 43.54 tried to bounce, and then it came down to a low of 43.27, and then it had another bounce, a lower high, and then it made a higher low, which was today so far at 43.49. I'd prefer to say I'm looking at this as a cluster formation. And that cluster formation says that all the technicals are extremely weak. The 9 is under the 14. The price is way under the 9. The price is also under the 200 period exponential moving. That's the one I use. Look how it held this whole period. Almost the same thing with the head and shoulders bottom back in January to February to March. And then it took off, just huge move from the 36 area to the 52.42 high peak E that was made back in April. So I'm going to make a suggestion here. Before we look at FCX, let's look at three things. We're going to look at high-grade copper, and that's been making lower lows and lower highs. I don't see it, the stochastic at 7.46. I don't actually see it showing any strength right now, and this is just a sudden pop to the upside, and the weekly is at 3.98, and the price right now is at 4.06. Let's go to SCCO, which is Southern Copper, and that has a slightly different chart formation, a little bit better than the FCX chart, but it too is making this like triple bottom attempt, and it's got a 200 period moving average at 98.01, and it's trading at 101.96. So I'm going to recommend hold off. You asked me for my opinion. You can make your own decisions, but I'm just saying, if it was me, I think that we're in for a little bit of a continuation of the consolidation in the general market. And I suspect that having made this nice move up in the Dow and even the Russell 2000 and even the financials, I think that we're in for a choppy period coming up in the next few days. If Microsoft gives bad news, if it gives any news that's interpreted this afternoon as bad news, we could see a sudden plunge tomorrow in the general market. So I'm just saying to you, hold off. Let's look at it again, maybe in a day or two. But I need to see FCX to show a little bit of strength. I'd like to see FCX maybe up a point, and then let's look at it again, closing a point higher. And then I think it's worth looking at.
I also have another question that's kind of related if you have time.
Hold on. We've got a break coming up. We'll take that question as soon as you return. Okay? We'll be back, folks. Dow's up 126. S&P's now down 8.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly Gold Report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust. The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds for both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Hi folks, so we're on and we're looking, let's just go back to this. So the question is, we were looking at FCX for Mike in Ormond Beach, and we covered that. And Mike, you've got another question. Yes, fire away.
Yeah, something else I've noticed too. Well, as far as FCX, I know Steve Rhodes always told us that the Australian dollar seems to affect that much more than our U.S. dollar. However, if you look at the U.S. dollar, $ DXY on a weekly chart, it looks like we're making higher lows and we're making lower highs. It's almost like a long, stretched out wedge formation. What's your opinion of the U.S. dollar? Do you think we could bounce back up to the 107 area?
So 107 is that. If we go to 107, my suspicion is that this general market is going to be under pressure for quite some time. It won't just be a week or two. It'll be all the way through August. Now, August sometimes is really choppy in the market. Actually, I can't say that. Sometimes August is way better than you expect, and sometimes you're expecting a rally, and it just chops around. So I'm going to suggest this. The dollar, the technicals have improved, but the stochastic's still at 52%. If I'm looking at the dollar together with the USD JPY, that's the yen, they usually go in concert together, not at the same percentage. But if you look at the USD JPY, we looked at it just a moment ago, that is very poor action. For the dollar to go to 107, I suspect that the yen, which is at 105.23, would probably push maybe to 158.90, maybe even touch 160. I'm not sure. But let's go one step at a time, because if you're looking at the EUR USD, that's the euro dollar currency pair, it's had a pullback, but it too is in the sideways range. So your question was on the dollar, and my answer is that if you're looking at the dollar, I've drawn in exactly what you're talking about, lower highs and higher lows. So it's a wedge formation. you know what? I don't put too much. I know a lot of people talk about like almost a diamond pattern, all that. To me, it's just another pattern, and it looks to me like it's held the Chapman Wave inside track propellant zone, but the pink 9-period moving average in the weekly chart is still, that's just saying it hasn't flipped to positive yet. And I'm looking at the general market, and I wouldn't be surprised if this consolidation in the semis, in the QQQ, the XLK, and that whole tech area continues a while longer. And that's this rotation that we've got. And that just says to me that the dollar is a little bit, all the different indices are quite independent right now. There's no relationship to the because it's sideways to the yields. And so all I'm going to say to you is that, to me, the dollar has 105.30 to 105, maybe 105.45. If it can even get there, that's going to be important. But if it gets there by Friday, now we're talking about something different, because I suspect then the pink 9-period moving average in the weekly goes back to green, and then I can say, now we can go to the upper Chapman Wave inside track repellent zone, and that takes you to about 105.90. So that's really, there's a lot going on. It's really a sideways consolidation that's been going on for quite a while in the dollar. I don't think that's going to change very much. I think we're still within that range. But the question is, can it go to the 107s? And I'm saying to you, I'm not sure it's going to break 105.35 just yet. I'll be impressed if it does, and we'll go with that. And of course, we've been long the dollar since 2018. So, so I have there's a bias here, but the bias really says there's a completely different reason for that. So your question was, can it do it? And my answer is, yeah, it could go higher, but I don't know. I'm not going to that 106 area yet. I'm waiting to see 105.50 taken out by the first week of August. If that happens, that's impressive. And then I think the general market starts to consolidate for longer. But I hope I've answered your question. Oh, let me do the other thing. If the dollar by either this Friday or this coming Monday closes under 104.20, then it goes sideways for longer. I needed to give you what would happen if it failed. So I hope, right now it's looking good. I would even say that by the end of the day, there's a chance that at 52% now, we still haven't got the buy signal in the dollar yet. I need a little bit more, and then we can get it, and then we'll see if we can get a buy mode. A buy mode would imply a leg D, and then your case comes into focus. I haven't got there yet. Hope it helps you.
Yes, it does, Basil. And one other thing too, I have a set of charts that I use that are your chart settings. I use them with the exponential moving averages, and I also keep a set of charts with SMAs, because I found out that a lot of money managers they trade off of the SMA. So I'd like to get an idea where maybe some money managers might be making their decisions.
I used to do exactly the same as you. I used to, even on this chart, I used to have a very faint SMA, because going back 20 or more years, I know that most of the money managers just grab, most of them are not technical analysts. They're getting better, but they're not technical analysts. And most of them just grab the one that's right there in the toolbox, and that's usually the SMA. Yes, I agree with you, but I like to use the exponential always, because I just find that for my charts, wow, those are the support levels, and it's just, they work so much better, at least for me.
Yep.
Thank you so much for calling.
You're a great teacher, Basil. You taught me a lot.
Thank you very much, Mike. I appreciate that. Mike in Ormond Beach gets a medal. Thank you, Mike. So the Dow's up 174. The S&P's down 2. This is what I'm talking about, this kind of mixed market. And you've got to have, when it's a bifurcated market, whereas you remember when the when the small caps were just going down, 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 even though the 1,000 the IWM 1,000 was going to new highs, the 2,000 was stuck. So you're just going to get used to the format now says they're getting a chance to rally. The same as the XLF was leading, but the KRE, the regional banks, look, XLF up 61 cents today at 43.95. The KRE which is the regionals, is up 46 cents, holding very nicely. It's starting to play catch up. Oh, so questions in the den. I did that, and I'll do it when I get back. So far, I've given the levels. I typed it into the den, and the other question was, I did it. I'll be back in a moment. Basil Chapman, Tiger Ignition Hour. Dow is up 200.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry Pesavento Friday, July 12th and Friday, July 26th, 9 a.m. to noon Eastern Time for 3 hours of live trading. For this month only, use promo code LarryJuly24 at checkout to save $50 on your first month's subscription. For all the information and to reserve your spot today, visit the front page of TFNN.com.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Hi, folks, real quick question I got here. Can I look at UNFI? I've already had this notated. It's in leg C in the weekly, only a leg A in the monthly. Can't even read what it is. Oh, this is United Natural Foods. So there's another one that was discussed just recently. What was that? Farmers something or other. All right. So this is acting very well. This is at 15.69. The way the steadiness with which this keeps holding the 9-period moving average, the question was longer term. Longer term, I'm going to say 22 would be 20 to 22 would be a target, as long as in the next month it doesn't have one. It's at 15. It doesn't once close under 1150. If it can hold above 11, I prefer above $12. It's at 15.69 right now. I think it has a nice steady move to the upside. 17 is going to be the big resistance. That's the first big resistance on the left side. That's the high. It's just over 17 actually. 17 point. Oops, let's do this right here. 17.33. So that's the area. 1690 to 1740 will be the area of resistance. So, okay, so let me just do this. I'll be back with Tom later today. The Dow is up quite nicely. It's up 186. We've added to the long position. Very tight stuff with this trading position. The IWM, it's very important the IWM keeps moving higher. I think it could digest some of the gains. It's up 1.04 at 2.77. We've had this long for quite some time. We've added to it, added trading positions. I like it. The KRE is something that we've been long, and we've just gone long. I've liked it for a while. This one's a little bit more tentative because it's 58.38. To break above 59 on the high of yesterday, it's going to take quite a lot of work to do. That means that the regional banks need to see money coming in on every dip. Will they do it? I don't know, but all the technicals are holding really well. It's got tremendous support it's at 58.37 in the 57 to 56 area. There's a lot of support. Have a great day. I'll see you later on with Tom, and check out